There is one question I couldn't stop thinking about this week. And honestly, it's not a question that I expected to ask. Because for months now, the AI story has felt pretty simple. Every week, we hear about another AI breakthrough, another company spends billions, another race to build the future. And naturally, investors keep asking the same question. Who is going to win the AI race? Will Nvidia stay on top? Will OpenAI dominate AI? Who is building the next trillion-dollar company? These are the questions everyone seems obsessed with. But the more I look at this week's market, the more I started feeling it might be the wrong question. Not because those companies don't matter, they obviously do, but because I kept noticing something that didn't fit the story. At first I ignored it, then I saw it again and again. By the end of the week, I had a list of companies on the surface that had nothing to do with AI. JP Morgan, Goldman Sachs, Morgan Stanley, Bank of America, Citigroup. If I had shown you that list a week ago and asked, what do these companies have to do with AI? I probably would have answered this, not much. But that's exactly what made this so interesting. Because once I stopped following headlines, I started following the money, and the entire week looked different. So I decided to test an idea. Instead of asking which company made the biggest AI announcement, I asked a different question. Who actually got paid? And the first answer completely caught me off guard. It was JP Morgan. JP Morgan didn't build an AI chip. It didn't train a new model. It didn't open a data center. And yet, it had just reported the largest quarterly profit ever recorded by a US bank. More than $21 billion in 3 months. Its investment banking fees rose 30%. Its equity trading revenue jumped 86%. At first, those numbers looked like nothing more than an exceptional quarter. But then Goldman reported. Its profit jumped 78%. Investment banking fees surged. Trading revenue reached record levels, and management said the AI build-out was creating years of potential financing and deal activity. Then Morgan Stanley, Citigroup, Bank of America, the same pattern kept appearing. The banks were not making the technology. They were actually making money from the activities surrounding it. And this is where story became much more interesting. Because building AI requires an almost unimaginable amount of capital. New data centers need financing. Chip companies need to expand production. Startups need billions just to remain competitive. Some companies borrow, some issue shares, some go public, some acquire competitors. And every time one of those things happens, Wall Street takes a seat at the table. But I still wanted something concrete, something that connected the AI boom directly to the fees these banks were collecting. Then I found SK hynix. SK hynix is one of the most important suppliers of high bandwidth memory, the type of memory used in advanced AI systems. Its massive US listing attracted extraordinary investor demand. The company raised around $26.5 billion, but hidden underneath that headline was another number. The banks working on the deal earned nearly $206 million in fees. Citigroup alone reportedly collected more than $70 million. And I want you to think about what that means. SK hynix takes the risk of expanding production. Investors takes the risk of buying the shares. The market decides what those shares are worth, but the banks, they get paid for making the transaction happen. And just when I thought that explained the pattern, one final story made it impossible to ignore. Bank of America had opened a $520 million credit line for OpenAI, its first loan to the company. And since 2025, the bank has reportedly helped AI-related businesses raise almost $500 billion across debt, leverage finance, and equity markets. That was the moment everything clicked. The banks weren't betting on one AI company. They were financing the entire race. And that distinction may be more important than it sounds. Now I want to be very careful here. I am not saying banks are the next AI stocks, and I'm not saying every bank is suddenly a great investment, because that's not what caught my attention this week. What caught my attention was something much more universal. Every major investment theme creates two different games. The first game is obvious. Everyone tries to figure out who will win, who builds the best product, who grows the fastest, who dominates the industry. That's where all the attention goes. But there is a second game that gets far less attention. Who gets paid while that competition is happening? Just think about it. If 10 companies are racing to dominate AI, they all need money, they all need financing, they all need infrastructure, they all need investors, they all create transactions, and every transaction creates opportunity for someone else. That's the part of the story I think many investors overlook, because we naturally focus on the company changing the world. We rarely focus on the businesses making that change possible, and history gives us plenty of examples like that. During the internet boom, telecom providers, network equipment companies, and payment businesses all benefited from the explosion of online activity. Not because they built every successful website, but because the entire ecosystem depended on them. AI may be creating something similar, not identical but similar. Every new AI factory, every funding round, every acquisition, every IPO, every major expansion creates demand for capital, financing, and financial services. And that's exactly why this week's bank's earnings stood out to me. Not because they proved the banks are the future of AI, but because they reminded me that investment themes are usually much bigger than the companies making the headlines. So maybe next time when a new trillion-dollar trend comes along, whether it's AI, robotics, quantum computing, or something we can't even imagine yet, don't just ask who is going to win. Ask another question. Who gets paid regardless of who wins? Because sometimes the most interesting investment opportunities aren't sitting at the center of the story. Sometimes they are quietly standing around it, so that the entire story moves forward. And I think this is the biggest investing lesson Wall Street gave us this week. If you enjoy this kind of market investigation, share your thoughts with me in the comment section. I read every single comment. So thanks for watching. Don't forget to like and subscribe. I will see you in the next one.